Here to break down the current state of the industry is crypto advisor and stablecoin expert, Sheila Warren. Sheila, welcome to the New York Stock Exchange.
Thanks, Ashley. It's so great to be here with you.
All right, so you have been involved in the crypto game since the early days. What have you done in the space, and how have you seen that space change?
Oh, wow. Well, it's been a crazy decade I've been involved in this industry. I founded the blockchain and digital assets team at the World Economic Forum, and then I was the inaugural CEO of the Crypto Council for Innovation, which is a policy organization that was advocating in Washington and Brussels and London and Hong Kong and Singapore and all these places for effective crypto policy. So over this decade, I mean, what a ride. I think we've seen a lot of normalization of crypto and of this asset class. We've seen some of the fear and some of the FUD get reduced in this space. And overall, I think we've seen from some corners a very reluctant acceptance of its tenacity, and in some cases, a really warm embrace.
And you're talking about that fear being reduced, and there definitely, I've noticed, a cross between traditional finance and crypto. Can you talk about that intersection and how it is impacting the retail investor?
Yeah, what a great question. So some people are calling this hybrid finance. And it's the idea that in the early days, back when I started, you had to be a pretty tech-savvy person to engage with this asset, with Bitcoin at the time or Ethereum. You had to know how to open a digital wallet, how to hold your own keys, self-custody. And now there's so many form factors available to people. So you can hold an ETF, you can hold the asset through a digital asset treasury. There's all these different options. And that's made the thing more friendly. It's made the opportunity more friendly and available and accessible to a lot of people. Over this entire period of time, I should note that traditional financial institutions have been engaging with this asset just quietly. And what you're seeing in this last year, maybe particularly the last 6 months, is a lot of that experimentation that had kind of gone stealth or been quiet come back into the public light.
And how has the regulatory environment impacted that? Because the last time you were on the show, the Genius Act was just signed into law. That happened on July 18th of 2025. Can you talk about your involvement in bringing that to law?
Yeah, that was a huge push over the last, even into the Biden administration, this idea that we had to have dollar-denominated stable coins. We had to have some regulatory clarity around what you could and couldn't do with them for payment issuers, for payment issued stable coins. And so we have that in Genius. Yes, and I was very involved in that, both at the last Congress and in this one as well. I think it's a critical step. I called this, last time I was on the show, jet fuel for the digital economy, because stable coins really are the way that a lot of the efficiencies are realized in the digital asset ecosystem. And I think you're seeing the reflection of that increased clarity and the increased acceptance of this entire industry in all the different opportunities that we're seeing.
And speaking of clarity, I understand that you're also advising on the Clarity Act. Can you tell us what that is and tell us how it differs from the Genius law?
So Genius is about payment issuer stablecoins specifically. It's about stablecoins which are US dollar denominated tools, digital currencies. They are reserve-backed, they are one-to-one pegged with the dollar. And the Clarity Act is a very different thing. So that is really about who has regulatory authority, whether that's the Commodities Future Trading Commission or the Securities Exchange Commission. So one of the biggest dramas and fights and battles over the last few years in the crypto and digital asset industry has been who has regulatory authority. Are crypto tokens commodities? Are they securities? If they're commodities, what's the authority the CFTC has to regulate them? And what does it mean to be within that perimeter? Now, the great news is, in tandem with hopefully seating a full commission at the CFTC, I think Acting Commissioner Caroline Pham's done an amazing job at the CFTC of being very open to this asset class, but we don't have a full commission. So if Mike Selig is confirmed as the new chair of the CFTC, the idea is that if clarity is passed, the chairs of the SEC, Paul Atkins, and the CFTC, whoever that may be, will be able to work together to create a full regulatory perimeter for this entire industry, which will enable a lot more movement.
And what is your crypto forecast for 2026?
Well, it's going to depend a lot on whether clarity passes or not. I think that's the other big remaining item. There are a lot of other niche issues that are really important as well. Taxation is a huge one. Decentralized finance or DeFi is a huge one. Staking is a huge one. Yield on some of these issues is a huge one. But we're also going to look ahead to the midterms. I think most people are predicting, I certainly am, that we're going to see a change in the composition politically in Congress, particularly in the House. If that happens, it may be that there is suddenly a slowing of momentum in this. Although I would argue that this industry and this asset class is so well baked at this point that you're going to see movement regardless. So my hope is that the US will continue to retain its edge, continue to be the home of innovation, and really try to land the plane here.
All right, Sheila Warren, crypto advisor and stablecoin expert, thank you so much for joining us at the New York Stock Exchange.
Thanks, Ashley.